So I'm going to be going over today's trade, and if you watch my videos in the past, then you know what strategy I use. I keep it very simple. Only three things that I look for, and then I execute the trade. And there was other opportunities that I didn't catch, but I'm going to show you guys how you can spot them, and let's get straight into it. Fuck that. All right, so if you guys watch my videos, if you haven't, that's all cool. But I go over three main things, and those three main things are going to be market structure. That's the first thing that I look for. The second thing is going to be supply and demand zones. That's the second thing that I look for. So we put supply and demand. And the last thing is going to be entry model. Okay, entry. And that is the only three things that I look for when I take trades. That's the only three things that I look for. If I don't see one of these, then I'm not gonna enter a trade. And if I do enter a trade and I lose, then I know why I lost. Or even if I do take a trade and I don't follow these three things, then I know that I broke my rules and I got lucky that day. So let's just get straight into it. Okay, so first thing is first. The first thing that I look for is market structure. So since the first thing that I'm looking for is market structure, what does that mean? That means that I have to identify where and what direction the market is going in at this current moment. So as you can see, the market at this moment, before, like, obviously we're downtrending at this point, but as you can see in this current moment right here, well, actually, let's replay this a little bit further back. Right here, as you can see, the market is what? The market is bullish right now, okay? So at this point, the market was bullish because we had this high, we had this low, and we had this new high that was created. So at this point, the market was bullish, okay? And once we broke this, then I knew that we were bullish and I knew that we were ideally, my game plan was that we can make higher highs, right? Because we know this is the higher high, higher low, higher high, and then I was just looking for that new higher high to be created. So that's exactly what I was looking for. But that goes off number one, market structure is already checked off, so we can put good. Okay. Now we have to identify a valid supply and demand zone. So that's the next thing that I look for. So I look for valid supply and demand zones on the 15-minute or on the 5 minute. And on the 15 minute, I don't think there was any zone. This wasn't really a good demand zone in my eyes, in my opinion. But if you look over here, then we do have a good demand zone and a valid demand zone at that in on the 5 minute. So this is something that I like. So now I have market structure already checked off. I have supply and demand zone. Now I have a supply zone or demand zone. So we can put S and D. Good. Now I just need an entry. So once price taps into here, all I need is an entry model. And then once I get that entry model, then I'm in. So let's just see what happened once price tapped into here. Okay. So once price tapped into here, as you can tell, it was very, 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 very bearish. Okay. We had a bearish candlestick, bearish candlestick, bearish candlestick. Even this candlestick was bearish. So what I was doing, I didn't enter right off the rip, like right when it tapped in. If I were to enter off of, like, right off the rip, that would have been a risk entry, or some people like to call it an aggressive entry. But for me, all I did was I waited for a good candlestick to close. Now, why did I wait for a good candlestick to close? Because I want to see buyers start coming in. So that's exactly what I did at this current moment. I waited for buyers to come in. So what I was expecting to enter off of a candlestick close entry. Now, a candlestick close entry is when you wait for the candlestick to close. Now, the reason I use this, like I said, is because I was waiting for the bulls to start kicking in, the buyers to start coming back. And that's exactly what happened. So as you can see, right around here is where I entered. I entered like literally like a second before it closed. So I guess I didn't wait until the candlestick closed, but right before it was about to close, I kind of had an idea that it was going to close around this area. So then it closed right here, and then the next candlestick did something like this, and then as you can tell, we came down a little bit, and then came back up and hit my price target, and it was that simple. Like I'm telling you, it was that simple. And all I did was use the three. I used these three things. I used these three, and it was good. And I took the trade, and it was a W. It was a W, and I made my profits. And all I did was follow a three-step criteria. All I did. So the entry would have been a candle close entry, and it was a very good entry. Like I said, it's very simple, very straightforward, straight to the point. And it's only three things that I'm looking for. Like I said, it's only three things that I'm looking for. I identified market structure, that was good. I identified the supplier. I identified the demand zone, because if the market is bullish, then I'm mainly looking for demand zones. And then the last step was the entry model. So once I looked for that good entry model, which was the candlestick close entry model, then I took the trade, and the rest is history. And the reason why this works so well for me is because it's simple. I'm not complicating stuff with like indicators, or I'm not complicating stuff with like volume or any of that other stuff. I'm really just looking for three things, and then I execute the trade. That's literally, it's like a sniper. I'm waiting for the three things, and then boom, right? So that's really what it is. And there was another example of this that happened later this day, and I'm gonna show you guys the other example. But that's a just a very simple, the very simple way and method that I trade. My strategy is very simple, very simple. And I've been on this strategy, like I've been mastering this for like 2 years already. So it's not like I just found this shit out the ass, or came up with this shit out the ass. It's like I've been doing this shit. You know what I'm saying? But we got another example right over here. So this is another example, because this is the candlestick before the impulse move, causing that what break of structure. So causing that right here. So let's see. So now obviously this was the high, this was the low, that was the high, and then we broke. So this was the change of that. And then as you can see, once we had that change of character, then this right here was the candlestick, not that caused it, but this is the candlestick that causes impulse move to cause this, right? So as you can see, now that we have that already and it's valid, I could have entered off of two entries. So this could have been an entry right here. Once it tapped in, I could have taken this, waited for this to close, and then I could have taken an entry, something along the lines like this, something like this, a quick little scalp. This could have been a very good trade right there. So that would have been a trade, a very simple trade, using the three-step process, or using my three-step criteria. Like I said, because now we've identified on the 5 minute that the market structure is bearish. So at this point, we put bearish. And then since the market is bearish, then I'm looking for supply zones. So I put supply, and then the entry model in this case would be a candlestick close entry model. So I would just wait for a, so at this point I just waited for a candlestick for this candlestick to close, and then I just took the entry. So candle close entry. And yeah, and if you do want to see the other entry models, because I have four entry models that I use, and you want to see them be broken down, I have another video on that, and you can check that one out. But this is basically, this is basically what it is. Very simple. It came back up after that zone was created. After this was actually a break of structure, it came back up, tapped in, and then it rejected perfectly. It rejected perfectly, and it came up back up here again. So as you can see, boom. And yeah, I mean that was basically it. Like I don't know. And this was on SPY. I usually trade AMD, but I'm starting to see a lot of these I'm starting to see my strategy play out a lot more on different stocks. So I'm not saying I want to trade every single stock, but I'm seeing a lot of good opportunities. So let's go on AMD and see if we found anything. I've set zones up, but I don't think, yeah, like this one right here, this one. And this is an example of like and I didn't take this, but this is an example of like a not a valid zone. And I'll tell you why. Because as you can see, this is a valid zone on the 1 minute, but it's not a valid zone on the 5 minute. You get it? And if anything, we did tap into here already. So right here, we tapped in and then we rejected. So that move already played out. So it tapped in right here, and it actually tapped in, crazy enough, it tapped into this supply zone right here. So this would have been a good entry. But then I saw this and I was like, let's see if that does reject. But as you can see, it was a horrible, how the candlesticks closed, they were not good. So at this point, I was just like, oh, let's just leave this here, see if it plays out. But yeah, that was AMD for today, which was pretty good. And as you can see, there's always opportunities, but this happened like right around the time. Like I said, I'm not on the charts all day, so I'm not fucking looking. I might have to, because there's a lot of good opportunities. I might have to, but yeah, I mean that was basically the trade. This one right here was very good, and then there was another one right here, this other one that you guys saw that I was zoning out, and then I think there was another one on the video that I was zoning out as well. Yeah, look like this. You see this right here, and this is why I don't trade breakouts, because I was just, like I said, I was just testing out other strategies, seeing how this happened, how this would work. And then look at that, boom. It looked like it wanted to drop too. It looked like it really did look like it wanted to drop, but it didn't drop. So I was like, fuck that. I said, fuck that. But yeah, as you can see, I mean, it did break, but it just like I was like, oh, let's see if it goes all the way here, and it didn't. But yeah, and I think there was an example of this actually tapping into a supply zone with my like three-step criteria, and it was actually right at market open. Yeah, right at market open, and this is why I'm saying like there's a lot of this strategy plays out all the time everywhere. It is you have to be aware of it. And I wasn't looking at Nvidia, but as you can see perfectly, look at this candlestick before impulse move down, candlestick for impulse move down, causing that break of structure. We are already bearish, right? We're already bearish. Low, high, low, and then this was the low. No, this was the lower low, the lower high, and then boom, look at that. We just dropped. And this happened right at market open. So in this case, it would be most like it would be best, I mean, to enter off of a rejection. I mean, off of a risk entry. And a risk entry is when you enter right off the rip. So once it comes in deep, honestly, I wouldn't even enter off of a risk entry. I would probably, let's see, 931. Okay, it tapped into here, 930. I probably would have entered off of a rejection entry if I'm being real. If I were to see this trade play out, like if I was to see this right here, I probably would have entered off of a rejection. So once it comes into here, I would wait, see kind of how it reacts off of this area, because this candlestick was very bullish, and once it starts coming down like this, that's probably where I would take the entry if I'm keeping it real. Like if I was to take this, my mindset would probably be something like this, and this would fall in between that the three-step criteria of my strategy, right? And this is why I say I would have taken this, but I didn't see the trade because I wasn't on the charts. I mean, um I wasn't checking this out. I was checking AMD and I was checking SPY out. But like I'll show you right here. Market structure is bearish, like I showed you guys on the higher time frame. And when it comes to identifying structure, I'm really only looking at the 5 and the 15 minute. But market structure is what, bearish at this point, right? So right when market opens, market structure is what, bearish. So we put bear. And then zone, for the zone, it's a supply. So we put supply. And then for the entry model, it would be a, what is it? A rejection or a reaction entry. So you're entering based off how that candlestick reacts off of this entry, off of this candlestick. So that would have been the entry right here, because I would have just waited, and I would have been like, okay, let's just wait. But boom, and the price target probably would have been somewhere right here. If I'm being like genuine, like 100% honest, it probably would have been somewhere right there. If I'm being real. But yeah, and those are the trades. Like it's very simple. Like I said, this strategy, this model is very very simple. And I know I didn't catch this. I'm not trying to be like that person that's like, oh, look what could have played at, or look what could have happened, because I did catch this shit. You know, I did catch this shit right here. Where's it at? Spy. I did catch this shit. So I did catch something. Um, but like they're everywhere. Like this shit is everywhere. Once you start seeing the pattern, once you start seeing what is actually valid and what is actually not, then you're gonna start to see, you're gonna be identifying these zones, and you're gonna be identifying these three things very very smoothly. And the good thing is that it's only three things that you really need to master, like market structure. Once you've identified market structure, then you're good. Once you've identified what a valid supply and demand zone is, then you're good. Once you've mastered the three entry models, then you're good. Because if anything, you should know, like, well, for me, I already know I'm not going to take a risk entry when the market is not pumping, right? When the market is just dead, not doing anything, I'm not going to take a risk entry, because I know there's going to be a lot of consolidation. I'd be better off taking a confirmation entry where I wait for the candlestick to give me another opportunity, and then I can re-enter, or I can enter off of that confirmation entry. And like I said, I go over the entry model in my other video, but this is just something that I'm explaining. And that's basically it. That's basically what I'm talking about. It's just like these three things are not hard to master. Once you start mastering these three things, then you can be very proficient and be very good at, very consistent. And when it comes to taking risk and how much you're risking, especially when it comes to like growing an account, I would really say start mastering this with just a couple contracts. Once you start seeing momentum, you want to push. And what I would say is, like, let's say you have $1,000 in your account. I would tell you, like, straight up, if you want to lose, if you're gonna lose, only lose minimum $50. Okay, only lose minimum $50. And the reason why I say only lose minimum $50 is because if you lose 50, then that that's the max you're gonna lose. But when you make money, like when you hit your target, the max on that target you could hit anywhere from $200 plus. And that's how I was able to grow my account. So even if like, and I'll show you right here. So right here you can see, like, let's say this is my zone, right? Let's say this is my stop loss is up here, right? As you can see, this is my, and what I would say, this is my technical stop loss. Technically looking at this is my stop loss up here, right? But if we do something like this and we reverse and we come up a little bit more right here, and by the time we tap into here, or we're at this price, we're at 182 point 30, and we're down negative 50, like we're down 50 at this point, then I'm gonna get out. I'm gonna get out right here, right? I'm not gonna wait for this to tap into here, because if it does come up into here, then I could be down 170, 180, when I know my max is 150. My max is 50. So even if it doesn't hit the target, like even if it doesn't hit my actual like technical stop, I'm gonna have to get out right here, because that's my actual like dollar amount stop loss that I'm gonna get out. So that's what I would get out. And even if it does something like this, I'm not going to trip about it. And the reason why I'm not going to trip about it is because I know that I can catch another trade. And the trade that I do catch is anywhere, like I said, from $200 plus. So let's say I hit a trade, let's say I lose and it's a $50 loss. But then I hit two trades in a row, and that's $400 W. You get it. So that's exactly what I'm saying. So, and that's exactly how you grow your account, and that's how I was able to grow my account, especially when it comes to like options trading. Because a lot of people talk about like the Greeks, and it's different from like futures trading and shit like that, because when it comes to futures trading, you can actually set a dollar amount where you want to get out at. When it comes to this, it's a little hard because the prices move up and down, and there's different prices at different zones, and then the data and the Greeks. So for me, that's what I have done, and this is why I was able to grow my account, was because of shit like this. Because like I know, shit, if this hits that zone, then I'm that's anywhere from $200 plus, and not even that. If there's a lot of momentum, and that's the thing. I know I'm going on and talking and shit. You can skip the video. You can just watch I don't even think anybody's on at this far in the video. If you are, comment. But if it taps into here, and I've been able to like not master, but I've been able to see when momentum is pushing, when it wants to drop lower and lower and lower, right? And when it doesn't want to. Like I've been able to do that because I've been on the charts, and I've been like, I had that experience. So I kind of have an idea of like when it wants to drop a little bit more, and when it wants to just tap into that zone and then reverse. Like right here on SPY, as you can see on SPY, um, I got out right there, and I could have held because I had more contracts. I could have held for a little longer, but right here, once it came up, it just didn't look like it wanted to come up anymore. It really didn't look like it wanted to come up anymore. Like when I saw this, I was just like, yeah, this shit is looking like it does not want to come up. So and also when it hit my target, it did something like this, and it came down like kind of like immediately. So then I got out. I was like, I'm not even gonna wait for this to go up a little higher or to push up more. No, I'm gonna get out. And obviously, there's times where I'm wrong and there's times where I'm right, but it is what it is. But yeah, I mean that was basically it. And I made this video and I make these breakdowns because I want you guys to understand how simple it is. Like how simple it is to master three things and to become like consistent. And the only thing I'm telling you, like the only thing, if you master these three things, the only thing that's gonna fuck you up is not identifying structure properly, not picking the right zones, or entering due to emotion. Like that's the only thing that's gonna fuck you up. Like I'm keeping it 100% real. That's the only thing that's gonna fuck you up. Because yeah, there's times where I've taken losses with this strategy. Of course, there's times where I've taken losses with this strategy. No strategy is perfect, but I know that that's just a part of the game. You know what I'm saying? When a zone doesn't hit, or when a zone breaks and I get stopped out, I know it's just a part of the game. But if I take a loss because I broke my rules, or because this was a zone and it wasn't valid, and I take a loss, then that's on me. So that's basically it. But other than that, if you did enjoy the video, you already know what to do. Leave a like, comment, and then subscribe. Let me know what y'all guys are on. Let me know what y'all guys think about this video. And other than that, that is it. I'm out. I gotta go eat.